Hello, everyone. How are you doing, guys? It's already end of the day, and we're going to discuss a very interesting topic. Everyone were talking about the stablecoin back in the days, and right now I believe, would agree that it's not already the experiment. It's a real thing that's happening right now with everyone. Raise your hand if you ever tried to swap stablecoin on or from stablecoin to your wallet at least once. Just want to understand who actually in the audience. Okay, we have very experienced, at least people who know what stablecoin is. Be ready for the questions to our experts, because we have experts from the different angles, from the different areas. And today our panel will be structured in the 3 different ways, but before I will tell you the structure of the panel, I would give a word to our panelists. Please, guys, introduce yourself, your area that you're presenting, and then maybe share one fun fact to the audience, so after the panel they will be able to talk to you and ask some questions. Patrick, the floor is yours.
Thanks very much. Hi, everyone. I'm Patrick, Senior Director for EU Strategy and Policy at Circle. Circle, for those who don't know, a global financial technology company, primarily known for being the issuer of USDC and EuroC, the largest regulated euro and dollar stablecoins in the world. I'm mostly part of the European team, leading our regulatory setup and expansion in Europe. Fun fact, I haven't prepared that, but I was one of the I was one of the first 10 EURC holders in the world, even before I joined Circle. And before EuroC was launched, and that kind of,
Amazing.
Hi guys, my name is Konstantins. I'm one of the founders of Paybis. Paybis is a crypto fiat infrastructure provider. We do on-ramps, off-ramps, wallets as a service. We provide crypto-friendly banking, so we help businesses to on-ramp and bring more Web2 people into Web3. Fun fact, I think on my Ethereum wallet, I have like hundreds of rug pull tokens, and Solana probably the same. So I was heavily into, let's say, crypto casino on Pump Fun and all other places. So been in the trenches.
Thank you. Yeah, David, floor is yours.
Thank you. Hello to all. Donc David Durouchoux, I'm Deputy CEO of General Forge. We were tokenizing the first bond in France in 2019, and we made CBDC. Donc we were really TradFi at the beginning. And when the rates came up in Europe in 22, 23, we went for stablecoin issuing in euro because they were only USD based. And now, we are developing our stablecoin. And fun fact. Maybe when we started tokenizing bonds, we knew there was this question of all the CBDC, money on chain for banks, etc. So we started to work with central banks, and we are still working with us, and there is nothing. And we, let's say, made it not made it yet on the CBDC, but on stablecoin, yes. So private markets and Web3 are more agile, I would say. So that's the thing I want to stress today.
Thank you. Martin.
Thanks, David. I'm Martin. I am the founder and CEO of Schuman Financial. We are also a stablecoin issuer and payments company. We offer, and we're focused specifically on Euro and Euro financial services, and our offering includes essentially instant 24/7 and pretty much free on and off ramp between Euros and stablecoins. And a fun fact, I was once a member of the founding team that built the world's first fully functional flying car.
Awesome. So thank you. And right now, I will give you a little bit of a plan that we're going to discuss today. First of all, from the regulatory perspective, consumer face, banking and infrastructure, we would like to discuss maybe what is happening right now with stable coins, what are the setup on the legal side, what is the consumers are thinking, as well as banking and infrastructure. The second part will be about why is not mass adoption happening. And then I would love you maybe to think ahead what will happen in the 5 years, and then we will give an opportunity for our audience to also challenge us with some questions, if you don't mind. Yeah, let's go. Maybe Patrick, tell us a little bit more on what actually happening right now in the regulatory aspects. Why their CBDC is winning, or there is another alternative way of other issuers, stablecoin issuers, enter into the market, and who actually wins? CBDCs or institutions who are entering into this market? What's your vision here?
Yeah, so there was a lot in there, but maybe as a starting point, regulatory context. Here in the EU, MiCA, the Markets in Crypto Assets Regulation, entered into force roughly 2 years ago for stablecoins, which is what we do here, e-money tokens. That regulatory clarity led to a whole lot of issuers starting to issue euro stablecoins and others. There are by now roughly 20 licensed e-money token issuers in Europe. I mean, 3 of them are sitting here. So that's a good thing. There is new stablecoins entering the market in Europe, supported by that regulatory clarity. But I think it's also important to say that while MiCA was a catalyst, S&P Global even projected, that could lead to euro stablecoin reaching 500 billion of supply by 2030, citing MiCA as a catalyst. But there's also the other side of the equation, which is there are regulatory barriers. Just as one example, and there's dozens I could cite, and probably you guys could also spend a lot of time talking about this. Just one example, if you want to build as developers, as projects now, businesses on top of these e-money token rails, custody transferring these e-money tokens, you will need both a MiCA license and also a payments license for that, for the same economic activity. That's a duplication and a bureaucracy, I think, that we need to solve in Europe. And that's something that happens nowhere else in the world, right? And I think we need to fix that. Maybe last word on CBDC. That's something that you mentioned. I feel like the public discussion in the EU around, CBDCs versus stablecoins, or the central bank digital euro from the ECB is kind of the European response to stablecoins, is like completely misleading. What is being prepared on the ECB side, on the retail digital euro side, has nothing to do with what we're building here in terms of e-money tokens. It's a centralized infrastructure. It's not a bearer asset. It's just another feature that you will be able to use in your banking and payments app. You can, in the future, choose to pay with your central bank digital euro and not with your deposits, for example. But it's completely outside of the realm that we're playing in, which is permissionless blockchain infrastructure, bearer assets, e-money tokens, primarily targeting these, internet native use cases, global capital markets, global crypto markets, cross-border payments, and all of that, 24/7, right? These are all things that are inherently different between the two. So I personally, I don't think the discussion CBDC in Europe versus stablecoins pushed somewhere else makes any sense. But also curious to hear any other voices on that.
Konstantin, if you want to comment on that part, feel free. But also, my question to you is actually related to consumer size. What are actually stablecoins users are using for right now? And maybe can provide some insights, and also our audience can understand if it's real.
Yeah. First, I want to comment on the regulation side. I totally agree. For example, we are now getting MiCA in Latvia and PI in Latvia. Like, you need to get 2 licenses instead of 1, which is an issue. I hope it will be fixed soon. Otherwise,
we will touch on issues maybe later.
Yeah. It's like let's say a problem with the current regulation, right? From the consumer side, we serve both consumers and businesses, right? We help, for example, retail individuals like you all get your stablecoins. For example, you want to buy stablecoin with Apple Pay. We are facilitating that on our platform, on other platforms like Trust Wallet, Bybit, for example. And of course, retail people, they get into stablecoins because there are multiple use cases, right? You can trade on DeFi, you can go and stake it and earn some yield. And there are multiple use cases that we all know about. And for them, they will not go to Circle, right? To get their stablecoin, they will not go to Tether. They go to retailers, like to brokers like us.
They can even buy their airline tickets right now through the stablecoins.
Yeah. And then the use cases are many, especially in developing regions, in the markets with a volatile currency. They, of course, find some kind of hedge position in stablecoins because they cannot get access to US dollars so easily. What we see from the business side is that a lot of small, medium enterprises which want to start transacting using stablecoins for cross-border settlements, for, let's say, cross-border payments, they also understand that now with all the regulation in place, it is much more secure, right? Because 2 years ago, small, medium enterprises, for them, stablecoins were still some digital fake money. They didn't understand it, right? When they understand that they can actually transact and, because we see adoption is happening. When there are two counterparties who are ready to, let's say, transact with each other, not through traditional fiat banking rails, but through stablecoins, this is where you see the demand coming from. And even yesterday, I met a guy from Standard Chartered, and he told me how they use stablecoins, that they, for example, help companies to pay for oil in stablecoins. And they're like, they told me they have like 25% of mint from Circle just by Standard Chartered last year, because there is a lot of demand for this use case. So that was something new for me as well, right? So we see stablecoin adoption everywhere now.
Yeah, now we have a David who can share from the banking perspective or maybe add something more. Right now it's happening. And I believe you guys were the pioneers on launching the stablecoin. We came back from Hong Kong FinTech Week where already also something happened in the regulation. HSBC, Standard Chartered also start moving into this direction. But tell us what makes, from the banking perspective, stablecoins attractive and your experience in real use case.
Alors, I want to stress that what you said is very important. Digital euro has nothing to do with stablecoins. Donc that is not really known even in Brussels where the laws are made. So that's very important to reinforce that message, and thank you for hearing it and say it loudly. And to rebound on that, I would say that as bank we are committed on both sides, capital market, regulation, etc. And what we want to engage as well is our clients, which are, let's say, new type of client, relatively younger, very active and very dynamic in the crypto space. And as a bank, we must serve all our clients. For us, the crypto space is one of the client rails we want to develop. Look, we don't oppose, let's say, traditional finance and decentralized finance, Web3, etc. What we want is to provide the same safe assets in both worlds. And what we are advocating to, especially at the ECB, at Brussels, etc., and to say, well, this world is growing, there is business to do, there are people here who wants to play with it as part of the everyday retail consumer, but as well as a very dynamic ecosystem, new brains thinking of new things, and we want to be the innovator of 21st and 22nd century. If we want to do so, if we don't want to tame every innovation in Europe, we have to be dynamic, we have to push for those people to give them the capabilities and the safe ground to grow as our future unicorn. So we have to do that, and as a bank, we have to do the link between CBDCs, which is necessary for a digital transformation within banks, to have the new set of innovation within the banks, within the traditional finance, which will boost our profitability, our cost efficiency, of course, etc. That's at stake for us. But this must be connected to the Web3 ecosystem. And the question for us is to articulate both. Donc, when I'm in Brussels and at the ECB, etc., and you probably as well, we say, well, we are your best friend to speak to Web3. And in the same place, I say here to Web3 people, I am your best friend to speak to those ECB regulators, etc., because it's very complicated to speak with them. They are very political people. You need the public affairs teams, etc. Donc, as a bank, we are committed on both, and the purpose here is to connect our stablecoin to CBDC and make a full rail so that each client finds its own way, and we grow it in a safe and compliant, etc.
Yeah, banks are playing the kind of mediatory role between the regulators, between the consumer side, and this is very important to talk right now with you guys also, and also get the feedback on what we are just discussing right now. Martin, tell us please about the infrastructure point of stablecoins. Are the new trend of launching the stablecoins is replacing the existing ones, or it's something else that we are building right now, the new market?
Thank you so much. And let me zoom out a bit, start by that. We're talking a lot about euro stablecoins, and those of you in the audience, you would be excused if you were thinking, why are we even talking about euro stablecoins? Like, they're non-existent compared to dollar stablecoins, right? And so let me start by explaining why this is the case. We are today in what I called the first era of stablecoins. And the first era of stablecoins is where pretty much the only use case of stablecoins, historically until now, has been crypto trading. And actually, BCG, Boston Consulting Group, recently had a very good study on the usage of stablecoins basically until last year. And even in payments, 99+% of volumes in payments still related to crypto trading. So including money being moved between different exchanges. And because crypto trading is denominated in US dollars, this is why all the circulating supply of stablecoins is US dollars. But if you look at crypto trading, that's a minuscule market compared to the rest of traditional financial markets. And again, just to give you an example, if you take just one specific product in traditional financial services, euro-dollar FX pair. The daily trading volume on euro-dollar FX pair is about an order magnitude bigger than all of the trading of all of the crypto pairs on all of the crypto exchanges in the world, right? And that's just one product. Now, why is that important? It's important because we're now moving into the second era of stablecoins. And in the second era of stablecoins, the real use case of stablecoins, and that's the really big one, it's basically stablecoins being used as settlement and transaction and payments instruments for tokenized financial services. And because traditional financial services are just so much bigger market, this is going to drive this very, very large market of other stablecoin, because most of the world doesn't operate on dollar. Now, going back to the question of your about the infrastructure. So what's absolutely critical here is that people today tell you, oh, you can trade tokenized bonds. It's so much better bonds on chain than not on chain because it's 24/7, it's instant, it's composable, all these things. They're all true. But then you ask them, okay, so if I sell you a tokenized bond at 6 p.m. on Friday, it's instant, right? So I get my money in the bank account instantly, right? And the answer you probably get is, oh, wait, well, actually, there's a cutoff time from my bank, and it's Friday, so you'll get it on Monday. So this is why it's so important to have stablecoins designed the right way as the infrastructure that actually enables all these benefits of blockchain for traditional financial services, which means that the stablecoin needs to become synonymous and equivalent with fiat money, meaning you can get in and out of it 24/7 instantly. And that's actually what we've built with our stablecoin, that if you want to be using our stablecoin as a for example, business customer, eventually even for retail, we give you an IBAN and we give you an ability to get in and out of stablecoin, meaning you instantly 24/7, meaning you send us fiat within less than 1 minute, you have stablecoin in your wallet, vice versa, you want cash in your bank account, you send us the stablecoin into redemption at wallet, you get money back in your bank account basically 24/7 instantly.
I would also comment from the DeFi perspective. I'm presenting this here, the aggregation part, self-custody part, and our users usually use the stablecoin to hedge their risks. I would say the previous panel was about the RWAs, and the stablecoin is also actually RWAs, but in a way where they can actually hedge the risk that they are trading with the Apple or Teslas, and this is where it's the kind of alternative to the fiat money. That's what I can say here for the Web3, for the self-DeFi degens. Next question, and second part, by the way, guys. This is about why the stable coin is still, if they are so powerful, not yet bring us first billion of users. So what basically on the regulatory perspective is, you already mentioned the bureaucracy, but maybe something else, or maybe we can talk about how to solve it already. Maybe there is some associations, or maybe we can call the audience, the panelists, to think about what on the regulatory perspective can allow us to finally bring this mass adoption happen.
I mean, first of all, I would say that we're already getting there, right? I mean, there are by now, it's hard to quantify, but there's like dozens and dozens of millions of monthly stablecoin users out there. And so it's not like we're kind of facing a huge barrier at the moment, and that's growing rather quickly. I would say probably the biggest barrier to adoption is still in my personal opinion, the user experience when it comes to people using standard non-custodial wallets. Probably for this crowd in this room and for us, it's kind of standard and normal by now. But if you tried sharing this experience with your family and friends, it becomes quickly a huge pain. So I think it's the UX, and what we're seeing is that more and more of the existing financial institutions, brokers, neobanks, and others are integrating stablecoin wallets into their products. We have partnerships with many of those. Just one example, Nubank in Brazil. You can now use USDC essentially as your digital dollar within that banking app. And Nubank is the fastest growing banking app probably in the world. Just one example. And so I think as the UX gets better, both on the non-custodial side, and some of the largest fintechs in the world integrate stablecoins into their experience, I think that will further boost growth. On the institutional side, it's pretty similar. But even independent of that, stablecoin adoption is growing massively across every single metric that we're tracking, like monthly active wallets, volumes, and all of that.
Yeah, I would agree, because once the big player on the fintech market is entering into the space, like you mentioned in Brazil, like SG Forge, like there is other alternative banks, FAB in Abu Dhabi, they are showing to the regulator also, hey guys, we're supporting this direction and let's move forward, let's be flexible at some point. So it's also kind of playing in and out. Konstantin, user experience is a really big pain. Tell us how you're solving this, or maybe other alternative things that are stopping us from finally making this mass adoption happen. What are
This is exactly the right point, and this was our company mission from the day one, and we're like 12 years already in the market. For example, our retail wallet is custodian, so we don't ask. So we keep a custody ourselves, and it's built on top of Fireblocks. So we've chosen a pretty secure partner to make sure that when a new person comes to us, and typically it's new people from Web 2 who want to get into Web 3, into crypto, into stablecoin, we try to make sure that the user experience is as simple as possible. They don't have to remember seed phrase. We still make sure it's pretty secure, and UI UX wise, it's also pretty secure. And we are kind of bringing the same idea to other companies we help with. So for example, we have now more and more payment institutions like AMIs, European AMIs, who wants to introduce crypto and stablecoins to their customers, to their business customers. So they're using our infrastructure as a service to implement this option inside their neobanks with our license on top, right? Because the problem is that one of the problems is that if you're a traditional bank or financial institution, you need to get an extra license to deal with crypto. Additional processes and so on and so on. So what we're giving them a solution as a service through API. They build their own UI UX, or we give them our widget, our UI UX. So they build the same experience that we have for our customers on their platforms, still being compliant, still without having issues with their regulators, because we take care of that stuff. So it means that we are helping our customers to get into crypto, but we also help other businesses to work with their customers. And it works. I mean, we have a lot of demand right now.
Yeah, David, maybe you can comment on that part. Also, we're on our side, we're also talking with our other group of suppliers that are wanted to launch their own chain with a stable coin to be able to at some point maybe unlock some funds on the moment when they're communicating with each other. And this is where also banks can help, and what maybe you can also tell and comment on that part, as well as what are the issues.
You're right. I would say the UX is very important, of course, because as you mentioned, it's a retail matter at the moment. I would say from an insider perspective, we see growth. There are two questions here. For Circle, which is clearly one of the leading MiCA compliant, etc. You are the leader in the sector, and voilà, nice achievement, congratulations. The question is more how to scale up at a level where and compete with traditional banking system. So that's a very, and for us as a smaller stablecoin in euro, because the euro stablecoin part is very, very small. So at the moment, what we need is not capital market rails and very mega growth. What we need is going for adoption. So it's what we are doing at the moment. In euro, for instance, we have, let's say, less than a billion issued. Donc, we need to connect and to create, let's say, a connectivity between market actors, corporates, retail, etc. And this is a networking operation. UX is important, of course, but the network and the liquidity matters are very important. So we are at the moment connecting to Deutsche Börse Group. We have signed a very strategic partnership last year. And within Deutsche Börse Group, it's a massive market infrastructure. They are serving millions of clients which are trading on their platform, which are then aggregating collateral, providing liquidity. And that's really where we want to be on top of the traditional liquidity providers. Well, I would not name them, but everyone knows them in the crypto, the Web3 environment. And that's very important because it is those guys who will provide to end users capability, and not only retail, including tomorrow the corporates. And if you have that rail, then as a bank, we can commit our balance sheet to providing loans, derivatives, etc., and grow the business that way. Donc,
Martin, would you like to add something to the issues and how we are solving them?
Yeah, I mean, I think the reason why it's taking time because, I mean, this is a big revolution for financial services to completely switch how they run, move on the blockchain. It's not going to happen overnight. And the larger the institution, the probably more slowly it is moving. And but I think payment is a good example. 2 years ago, if we were sitting here, like nobody would put stablecoin and payments in the same sentence. I mean, other than people like who are very much deeply into crypto, into blockchain, right? Now, it's like you talk pretty much to any corporate, any bank, all of them talk about, yes, obviously, so much better rail for payments, stablecoins, right? But still, if you look at vast majority of the large banks, they're still not using stable coins on a daily routine basis for cross-border payments, right? So it just takes time. And as David said, like it's very, very important that we start to basically build this ecosystem, that we integrate with the traditional financial service providers. It takes time for us, it takes time for them. I mean, if you think about it also, it's this, you know, even if we, for example, got company X, I'm making this up, BP, who says today, okay, we'll probably want to move on to the stablecoin rails. Like, this is probably going to be a year-long process, right? They will probably hire, like, first an external consulting firm that will analyze for them benefits, how do you integrate it? And they will probably hire another consulting firm that will then help them with the integration. So these things take time, but again, we're on a cusp of it because I think, as Patrick said at the beginning of this panel, just 2 months ago, Standard & Poor's, who don't have any horse in this race, said very clearly, based on our analysis, based on the trends of financial services moving on chain, just for the euro stablecoin market, we expect, and that's the medium scenario, more than $500 billion euros in terms of supply or circulating supply. So yeah, we're builders and we just need to keep building, and this is going to take off very soon.
Yeah, I hope at some point, that someday, G20 will agree that they're going to use the stable coin that for their relationship between countries, and then we finally make this mass adoption happen. And I'm slightly moving to basically this is my dream. Maybe you guys sharing some predictions. We have just 1 minute from each of you. What are your ideal world with stable coins? What do you think will happen in the future? What do you want to happen in the future? And then we will ask the audience some questions. And yeah, thanks a lot, Patrick, or someone else. Yeah.
Well, let me start now.
Sure.
Look, the prediction is very simple. I think within 5 to 10 years, stablecoins will be everywhere. Everything will be run on stablecoins, except nobody will be aware that things are run on stablecoins. Because even now, the most exciting use cases we're doing is we're integrating with providers, for example, for payments, where their customers have no idea that they're using stablecoin, right? And they don't care. Like, just like I don't care, you don't care what technology the bank is using, what clearing system, what blah, blah, blah to make it happen. What you care about, how quickly does my money move to my friend or to the supplier I am paying, how securely and how cheaply. And this is what stablecoins are enabling.
Right, to say it in another world, but maybe the similar point. Today we are a small community. Everyone here knows what is a stablecoin, etc. But if you ask in the street who can pay with a stablecoin, let's say for an ice cream on the, no one will take it. So the work we are doing as a bank and as a global bank and connected to our retail users, it's to making that stablecoin practice, let's say, a full mainstream solution. And that goes with a few, let's say, security measures, process approach, etc. And as a bank, we are in that process, as you say, taking time, because we want to do it seriously. And if you do so, people will have trust in that rail, and they will use it. If there is no trust, no one. It will stay like a nerdy thing. Donc we want to bring in trust, meaning expanding the market, and that's the key point we are making at the moment.
Yeah, I agree to what you guys say, and I think if you remember when SEPA was founded, right, it was an alternative to SWIFT, right? So what I see right now, stablecoins are alternative.
SWIFT is launching their own stable, actually.
Yeah. I mean, if you see like our use cases that we see from our clients, they use stablecoin as alternative to SWIFT and SEPA. So it's not about the actual stablecoin itself. It's just technical layer to move money. They don't care if they say bank transfer or stablecoin. If they see that transferring stablecoin is faster, more predictable, less intermediaries, they just go to the technical layer. So I think what will happen is what exactly Martin said. Maybe in 5-10 years from now, you pay for ice cream. Instead of going through Visa network, it will go through blockchain, and it will be just cheaper for the merchant. They will pay less fees, potentially.
User experience will be improved. Fragmented liquidity is solved. Nobody knows that there is a stable behind, and then we start basically moving from the fiat money to the digital money, and nobody actually feels like this shift already happened. This is ideal future that we are discussing, guys. Thanks a lot for you for sharing the expertise. Patrick, Konstantin, David, Martin. Guys, the questions will be after the panel. I think you can catch using the fun fact, because we're already running out of the time. And one quick ask. We're talking about the mass adoption. I always ask everyone in the audience to go outside to find one person who never heard about crypto, educate them on how to DeFi, how to crypto, and then we actually make the mass adoption happen. This all on us. On the crypto people who are in this audience. Thanks a lot for listening. Let's go. Thank you, guys.
Thank you.